Hello and welcome back to my channel, Iraqi Dinar Reshape, the Iraqi Dinar Revaluation, a turning point for Iraq's economy. The Iraqi dinar, IQD, has long been a topic of speculation and debate among economists, investors, and financial analysts. For years, discussions about the potential revaluation, RV, of the dinar have fueled hope and uncertainty in the global currency market. Recent developments, including new financial policies published in Iraq's official Gazette and reported collaboration with the U.S. Treasury, suggest that a major shift may be imminent. This article explores the history of the Iraqi dinar, the factors influencing its value, the implications of a revaluation, and the potential impact on Iraq's economy and global investors. A brief history of the Iraqi dinar. The Iraqi dinar has undergone significant changes over the past few decades. Once valued at a much higher exchange rate, the dinar's decline began in the early 1990s due to the Gulf War, subsequent economic sanctions, and political instability. The pre-1990s era, before Iraq's invasion of Kuwait in 1990, the Iraqi dinar was a strong currency, valued at around 3.2 USD per dinar. Iraq's vast oil reserves supported a stable economy, and the dinar benefited from strong government backing. However, the Gulf War, followed by international sanctions, crippled the economy. Sanctions and economic decline, 1990 to 2003. With the imposition of UN sanctions, Iraq's economic infrastructure collapsed. Inflation soared, and the dinar lost most of its value. By the late 1990s, hyperinflation had rendered the currency nearly worthless on the international stage. Post-2003 currency reforms. Following the US-led invasion in 2003, Iraq introduced a new version of the dinar to stabilize its monetary system. The Central Bank of Iraq, CBI, worked to establish banking reforms, but the country continued to struggle with corruption, security concerns, and political instability, limiting the dinar's recovery. The role of the U.S. Treasury and international organizations. Recent reports indicate that the U.S. Treasury has been working with the Iraqi government and the CBI to align Iraq's monetary policies with international financial standards. This collaboration is aimed at stabilizing the dinar, attracting foreign investment, and integrating Iraq more effectively into the global financial system. Key economic reforms. To prepare for a potential currency revaluation, Iraq has undertaken several important steps, including 1. Implementing digital banking systems. To reduce corruption and improve financial transparency, Iraq has been transitioning toward digital banking solutions. 2. Strengthening anti-money laundering laws. The government has introduced stricter regulations to comply with global financial standards. 3. Increasing foreign reserves. Iraq has been boosting its foreign currency reserves, particularly in US dollars and gold, to back the dinar's value. 4. Reducing dependence on the US dollar. By encouraging transactions in dinars rather than dollars, Iraq aims to increase the demand for its national currency. The publication of these reforms in the official Gazette suggests that the Iraqi government is finalizing policies that could significantly alter the exchange rate of the dinar. What does the revaluation mean? A currency revaluation occurs when a country's central bank increases the official value of its currency relative to a benchmark, such as the US dollar. If Iraq is indeed moving toward a revaluation, it could lead to 1. Increased purchasing power for Iraqi citizens. A stronger dinar would make imported goods cheaper, benefiting consumers. Inflation could be controlled more effectively, improving economic stability. 2. Enhanced foreign investment. A stable currency would attract international investors, particularly in Iraq's oil sector. Stronger investor confidence could lead to economic growth and job creation. 3. boosted economic confidence. A revaluation would signal that Iraq's financial sector is stabilizing. The dinar could become a more widely accepted currency in regional trade. However, while these benefits are promising, the revaluation process also comes with challenges. Potential challenges and risks. While a dinar revaluation could have significant economic benefits, it is not without risks. Short-term volatility, sudden changes in a currency's value can lead to market instability. If the revaluation is not carefully managed, it could result in price fluctuations in essential goods, panic selling or hoarding of currency, a temporary increase in inflation, geopolitical uncertainty. Iraq remains a politically unstable country, and external pressures from neighboring nations and global powers could impact the success of a revaluation. If Iraq does not maintain stability, foreign investors may hesitate to engage with its economy. Speculative risks. Many individuals and investors have been holding on to Iraqi dinars in hopes of a significant value increase. If a revaluation does not meet expectations, it could lead to disappointment and financial losses for speculators. How will the revaluation impact global markets? If Iraq successfully revalues the dinar, it could have implications beyond its borders. Oil market influence. As one of the world's largest oil producers, Iraq plays a crucial role in global energy markets. A stronger dinar could affect oil pricing strategies, change the dynamics of OPEC negotiations, increase Iraq's influence in the Middle East's economic landscape. Potential ripple effects in currency markets. Currency traders closely monitor changes in exchange rates. A revaluation of the dinar could lead to adjustments in foreign exchange forex markets, particularly for countries with economic ties to Iraq. Impact on Iraq's trade partners. Countries with strong economic ties to Iraq, including China, Turkey, and the Gulf nations, could benefit from a more stable and valuable dinar, leading to increased trade and investment opportunities. What's next? As Iraq moves closer to a potential dinar revaluation, several factors will determine its success. 1. Government stability. The ability of Iraq's government to implement and sustain economic reforms will be critical. 2. International support. Continued backing from institutions like the IMF, World Bank, and U.S. Treasury will strengthen investor confidence. 3. Market reactions. How businesses, banks, and the general public respond to the changes will influence long-term outcomes. What should investors do? For those holding or considering investing in Iraqi dinars, it is essential to stay updated on official government announcements, monitor global financial trends and oil market developments, seek advice from financial experts before making investment decisions. Final thoughts. The potential revaluation of the Iraqi dinar represents a major turning point for Iraq's economy. While speculation has surrounded the dinar for years, the latest report suggests that Iraq is taking concrete steps toward financial stability. If successful, a revaluation could strengthen Iraq's economy, improve the living standards of Iraqi citizens, attract foreign investment, and boost global market confidence. However, investors and analysts should remain cautious. While the outlook is optimistic, economic and geopolitical risks still exist. As developments unfold, staying informed and making well-researched decisions will be crucial for anyone involved in the dinar's future.